Rich Dad, Poor Dad. This book brings to me childhood memories. My dad used to have a copy of this book and it's got quite a catchy name, so it got imprinted into my 7-year-old subconscious. Not because my dad ever mentioned that book or whether it was good or not. He did not say anything either way. However, years later, when I was trying to get my personal finance literacy up, I had a few mentors cautioning me about reading The Rich Dad, Poor Dad or taking anything that Robert Kiyosaki says too literally. In fact, you can see that in this video, Cody has said that Rich Dad, Poor Dad was wrong. And one of my mentors, Ramit Sethi, in this video has very publicly said that you should not read beyond the first chapter of Rich Dad, Poor Dad. However, a few months back, I spotted this video of Robert Kiyosaki himself with Finance with Sharan. And he was claiming to own 15,000 houses and he is in $1.2 billion of debt. That sparked my curiosity. So I went on to this app that I use to screen books out called Shortform and read the abridged version of it. And having read that, I almost did not want to read the full book. However, being in the personal finance space, I thought it is actually really wise for me to have an opinion of the book myself because it's one of the classics of personal finance rather than believe all of the other influencers and go around preaching what essentially is their voice, not mine. So I went ahead and read the original copy of Rich Dad, Poor Dad. And in this episode, I'm going to talk about what I thought of it. First things first, Rich Dad, Poor Dad doesn't focus on tactics. It focuses on principles, which could be really difficult to understand if you are new in the personal finance space. So having spent a considerable amount of time in the space, now I understand where he's coming from. I don't necessarily always agree with him, but I understand where he's coming from. And my biggest problem with Rich Dad, Poor Dad is that if you don't understand the context, the principles themselves can put you into a huge amount of financial trouble. So let's talk about the book. I really liked the fact that he compared a rich dad of his friends to his poor dad, or so he calls him. What I really found interesting is his definition of education. He said that education in the academic sense is not all education. If you want to be educated, do apprenticeships, do internships, which I found really fascinating because I come from quite an academic family and I will have to agree that a lot of them are not financially as savvy as a lot of other people that I have met who are not in academia. However, he makes a tall claim and says that you should not go and get degrees. You should actually go and get apprenticeships. I have a problem with that because the data does not back up. In the US at least, your income is directly proportional to the number of years of education you have. So if you have a higher degree, you are likely to earn a lot more than someone without the degree. It's very well for Rich Dad, Poor Dad to say that, but data doesn't back it up. So frankly, my advice on that would be you want to get educated as much as you can. However, never stop learning. Education is not one-dimensional. You don't need to only be an academic or only be someone who is learning by doing. You can do both. Try and do both because that is how your brain learns something completely. You learn the theory, you learn the practice, you put all of that together and then you have learned the entire thing. The next thing he talks about are assets and liabilities. And he says that your home is not an asset, which is great. I understand the principle of home ownership, and if you end up spending $1 million on your main residence and you are not really running a business out of it or you are not renting out a room to someone, you are actually putting in a lot of your own money into your primary home and that money is not generating cash flow. So that is not an asset, that's a liability. That is basically what he wants to say. And I get it. What you don't want to do is spend all your life's earnings and lock it up in a property that you want to live in. However, what he doesn't go into into in a lot of detail is the nuance of buy versus rent. Sometimes it's better to rent. Sometimes it's better to buy, because even if you did not buy the house, if you have to rent the house from someone else, there would be money coming out of your account every month without you actually building an asset. However, in case of home ownership, you can at least pass it down or downsize or something. So that essentially is the difference between looking at it as a black or a white. If you are considering buying a property as your first home, I would recommend this video that I'll link up here. I have discussed buy versus rent in a huge amount of detail. After finishing this video, feel free to go check that one out. The next thing he talks about are taxes, and he doesn't like taxes very much, which is very unlike me because I don't mind paying my fair share of taxes to look after the rest of society. He will probably think that I am from those academic families who are virtually communists, but I promise you I'm not a communist. But I also believe that taking care of your society around you is a good thing to do. It's fine if you have your differences. I won't judge. I understand that taxes are a pain for a lot of us, and I'm also not talking about being silly with my taxes, right? Of course, I will legally pay the least amount of tax possible. However, I don't want to build up infrastructure just to avoid taxes. And this is where I think Robert Kiyosaki falls really short. He talks about setting up corporation taxes because corporate taxes are lower than individual taxes. This is broadly true and has been for several years. However, this is only true when you are playing at scale. If you have 3, 4, 5 businesses, or your business is generating several thousands of dollars, then it makes sense to go and incorporate your business and build up your portfolio in a way that you are paying less taxes. Where it does not make sense is a lot of people will try and go set up a company and try to expense their personal expense through a company. For example, you are buying a car and you think you can expense the car's mileage, petrol, or the cost of the car through your company. However, you sit and work from home. You have no business driving a car around. Do you think that the taxman is that stupid that they will let you expense something against your company even though you have no business of running that expense through your company? Of course, you can expense meals and things like that, but honestly, the hassle that you have to go through to do all of that is simply not worth it. If you have 2-3 businesses, or if you are running a business that's generating several thousands of pounds, absolutely go and speak to an accountant, speak to a lawyer who can help you with this stuff. But just for beginners, this doesn't make sense. And in fact, if you are someone who's trying to set up a business, this probably can be a huge distraction. I'll read to you something that I read on short form, which I thought made the point really well. It says, superficially, this is true. In 2017 and before, corporate income tax used to be a flat 35%, while personal income tax was 39.6% at the highest bracket. In 2018, this became 21% and 37% respectively. What he ignores, though, is that the corporate income is paid out to shareholders through dividends, which incurs an additional 20% personal gains tax. Therefore, the actual rate on dividends is now 1 minus 0.79 into 0.8 equal to 36.8%, only slightly better than 37%. So this is really interesting because you can't just get paid money into your company and expense. That's not how it works. You will need some money in your bank account. And when you get paid that through dividends, you will end up paying a personal income tax on the capital gains. So all of this that you have done will save you 0.02%. Of course, when the amount is huge, 0.02% becomes a huge number. However, for most of us, 0.02% is just £5 here or there. He also talks about incorporating a company to protect yourself, to have limited liability. It'll protect you from lawsuits. Corporations and trusts can protect assets from creditors. A rich person as an individual may control things but own nothing. However, the caveat is that in certain cases, like fraud or the corporation being essentially the same same as the person, a litigant, can pierce the corporate veil and hold you individually responsible. If you are doing all of this to run some tax fraud, honestly, don't do it, because the taxman can still come after you. And if you are not going to run a fraud, what illegal business are you running that you want protection from the law? Robert Kiyosaki himself says he is $1.2 billion in debt and he doesn't care if the banks were to collapse. I don't think that's being fiscally responsible. In fact, I think that's very poor personal finance advice for someone who's just starting out on their journey. What I can share with you as my experience from running a business and having set up the business is that I spent way too much time in the logistics and the legalities of it. What I should have done is I should have looked at the sales and the marketing. I should have paid a lot more attention to the sales and marketing than to the legal litigation and all of those nuances that lawyers will tell you a lot about. Of course, that's their job. They are being good lawyers. However, all of that makes sense only when you have a substantial amount to lose. Build up that substantial amount first and then think of how you want to incorporate the company, what lawyers and accountants you want in place as your CFO or counsel. The next thing he says is that learn in a job, don't work for money. And this goes back to how his rich dad refused to pay him any money to do the work. And I get it, it builds resilience, but for most of us, our jobs will be our way to start saving and investing and then getting into a business if that's what we wanted. But for many of us, we don't want to run a business. We have seen businesses fail. I have a lot of my students in the Abundant Psyche community who will tell you that they won't go anywhere near setting up a business because they have been burned by seeing their parents fail in business. And you have to acknowledge that. A lot of people do not want to do business. Business is not easy, especially for small businesses. It can be brutal. So you have to honor the fact that there are these people out there who don't want to run businesses but still want to be rich. And you cannot just say that business is the only way to become rich. Have you met Satya Nadella, Sundar Pichai, Sheryl Sandberg? All of these people have become rich by working for someone else. We only talk about the Mark Zuckerbergs or the Steve Jobs of the world. How about the people who are really making an impact on the whole world and their salaries are an unfathomable number for most of us? Do you think they're not rich? And you don't even have to go to Silicon Valley. You can come to London, just walk across my office into the city. There are a lot of people who are not hustling as much as probably a Satya Nadella or a Sundar Pichai, who are not hustling definitely as much as a small business owner and are getting $500,000 of paycheck every year without fail, and they're doing phenomenally well for themselves. What about them? You can't just have this one-dimensional approach to becoming rich. That is the only way to become rich. However, I do take his point. You also want to learn in a job besides earning in a job so that you can earn more in your next job. And that is typically why I encourage everyone to have some continuous learning going on. That is what we discuss in the Six Figure Club month on month, that don't just earn the money. Think about where you want your stretch opportunities. Think 5 years ahead, 10 years ahead into where you want to be and what you want to learn now so that you can be there 10 years later. So in principle, I agree with it, not tactically, because I think you can learn and earn, not or. And the next thing he talks about is mindset. He talks about fear, the fact that for most of us, the pain of losing is more than the joy of becoming rich. And I agree with that. A lot of us, including myself, are afraid to lose money on opportunities that might not make us a lot of money back. Many a times, and I will tell this for myself, I am my hardest critic and I get really scared when I start betting on myself. I put myself under a lot of pressure and that's not good. I agree completely with him. The next thing he talks about is cynicism. And I agree that if I am fearful of losing money, then I tend to be more cynical about the future and then not work towards a future that I want. The next thing he talks about is laziness. He says that laziness keeps us from working hard and working for the things that we want in life. And instead of saying, I can't afford it, he suggests that we ask, how can I afford it? I love this. I love the fact that we are being aspirational now. We are asking the bigger questions questions about, well, I won't take no for an answer. What will it take for me to get to a yes? And honestly, this is how I live my life, or try to live my life most of the days. And this is really at the core of the principle of abundance. I just don't want to take no for an answer. How can I get to a yes? Of course, that does not mean that you will do something illegal or fraudulent. You have to be within your moral principles, your ethical principles, your legal principles. But beyond that, it's really amazing to start asking, how can I do it? You know, a common thing that we do, and I include myself in it, is we say we don't have time. But for a moment, if we stop that chatter and we ask, how can I have time? Where in my day can I fit this thing in? If it's really important to me, I should be able to fit it in. And you start finding gaps in your day. You start observing your day with that lens of, I want to fit this thing into my life 30 minutes a day. And you find that gap. That is how I found the gap for my meditation that I do every single day without fail. And I have now managed to increase that gap. I probably should start doing that for my health, but hey. The next thing he talks about are bad habits, which I agree. We have a lot of bad habits that are inculcated into us without us even sometimes realizing. And if you are interested, go check out this video that I will link up here, where I talked about the 7 habits that made me rich. The next thing he talks about is arrogance and having this holier than thou attitude, which is not great. It puts people off. It very likely puts you off when you are talking to someone who's arrogant as well. So he talks about being like a sponge, ready to learn all the time. So in short, his entire concept around mindset, I really liked it. It really resonated with me. And I liked the fact that he talked about learning broad. He talked about being a generalist, picking up things from different domains and putting them together. He's talked about keeping your ears and eyes open in case your job was to be made redundant. And this is especially true in the age of artificial intelligence that we live in today. Some jobs are going to be automated. Let's be honest about it. I work in the field. I know that some jobs will be automated, especially people who are not very good at their jobs. The age of mediocrity is over. This is the age of excellence. And if you are excellent at something, you are a specialist at it, great. You will never have trouble finding a job. However, if you are just only going slightly deep into something and not broad enough, so you have your blinkers on about all the other fields in the world, you might have a tough time finding a job. And what he suggests is keep an eye out on the world, keep an ear to the ground, and learn as much as you can from other fields as well, so that in the event that you find yourself jobless, you have something else to fall back on. And the next thing is getting started. He talks about needing a reason greater than reality, actively choosing to be rich and think rich every day, choosing your friends carefully, because your peer group, as I have discussed many times before, has a direct impact on how you think and what you do. Master a formula of making money and then try to master another one and another one. So it's interesting that he talks about this, because to me, he almost sounded like business is the only way to make money. I think what we would rather take out from this is figure out what is working for us, double down on that, master that, and then let's add another skill set of making money. Once we have mastered that too, we go on to another one and another one. Because when you keep on stacking one skill on top of the other, you almost become invincible. Then he talks about paying yourself first, which is what we talk about all the time here. Automate your accounts, put your money into your savings accounts right at the time when you get paid. If you haven't watched this video about payday routines, I will link it up here and go have a check out. He also talks about paying your advisors and brokers and consultants well, right? Because you are essentially learning from them. If you don't keep them well, they will not want to serve you beyond a point. You have to be paying them well so that they can thrive in their trade and learn more. They are also excited to learn more, and you get the benefits of their success. Then he talks about buying assets that generate free money. Here he's talking about houses and businesses, I believe, mostly houses. However, run your numbers before you do anything else. Run your numbers, because this is not straightforward at all, especially when you are talking about real estate, especially when you are talking about business. businesses. It's really not straightforward. So run your numbers. If in doubt, go to this video about rent and buy and watch that. The next thing he talks about is a bit weird for me, which is find your personal hero and emulating them. For me, I have not really found my personal hero as such. I think I want to become this version of myself, and that's my hero. But you don't have to necessarily find a living person. You can probably very well refine and define a future self that you want to be and start emulating them, start being like them. This comes back to those core principles of manifestation that I don't really want to get into. In fact, manifestation is not my subject at all, but I have several friends and colleagues who are interested in manifestation, and therefore I know a bit about the subject. And yeah, it's really defining and refining that future self and then living as if you are that future self so that you ultimately become that person. The next thing he talks about is give to others first and it will come back over many times. This is the principle of generosity, and at the heart of abundance, there is nothing more abundant than being generous. I have enough, take some. And if you offer yourself, your services, your money, your critical thinking to others and help them when they need you, be rest assured that the world is looking out for you. Become rich and be charitable, be generous. This is not about last moment decisions and networking so that someone refers you to that job. This is about providing value to your community through the years over and over and over again, so that one day when you might need them, you can just pick up the phone and call them and say, hey, I need this. Do you think you could do me a favor? And chances are that if you have been a good friend and the industry knows and respects you as a good friend, they are more than likely to say yes. So it will come back. Generosity comes back. I truly believe in this. So yeah, that was my review of The Rich Dad, Poor Dad. I violently disagree to a lot of things that Kiyosaki says. I wholeheartedly agree to a lot of things that he says as well. So overall, was it a good read? I think it was a fantastic read. It kept me on my toes because I was fully expecting him to throw in something like, oh, don't care about the loans that you don't need to pay back to the bank, which, to be fair, he sort of implied. But equally, his mindset piece was beautiful. I loved it. And would I recommend you read it? I would 100% recommend you read it, just because I think it's better that you have your opinion about it. However, if you are a beginner, if you are just starting out in your journey of personal finance, I would suggest that this is a far more mature book. This should not be your first read, because if you don't understand and implement some of the things that he says, you might get into some financial trouble. And I don't want you to get into any financial trouble. So much better, come join our community over here. We love to have a chat. I love reading your comments. And if you want to take one step further and come on to my newsletter list, I send a newsletter every Friday or Saturday to my exclusive insiders community that doesn't go out to anyone else. And I talk about my week and what the new thing that I learned that week. And I talk a lot about AI and current affairs as well. So come and hop into my email list. I will put in the link below. Take one of the quizzes, one of the free downloadables, have your pick, and come join us inside. So that was my review of Rich Dad, Poor Dad. Did it surprise you? Have you read the book? What did you think of it? Leave me a comment below, because I love going through your comments, and some of you have really insightful comments, so I've been really enjoying reading your comments. And if you haven't subscribed yet, what are you doing? It really does mean a lot to me that you are watching this. And if you are here still listening to me and not subscribed, please, I would consider it a huge favor if you hit that subscribe button. It does help me out quite a lot. And if you have enjoyed this, you might enjoy something like this or this that I will leave up here. And I will see you the next time. Bye.